Hi, everyone. Thanks for joining today's webinar. I am Nicole Sienna, the VP of Studio for Red Cloud Financial Services, and your moderator today. I'm joined here with Russell Starr, President, CEO, and Director of Trillium Gold Mines, plus from the Pacton Gold team, Dale Ginn, Executive Chairman and Director, and Carly Oliver, VP of Exploration and Director. So thanks, everyone, for joining us today.
Thank you.
Now, there's some really exciting news coming from both teams here today, or actually came out yesterday. So I'm going to hand it over to you, Russ, and you can kick us off.
All right. Look, everyone, thank you so much for attending. And I know everyone's going to have a ton of questions. We're just deep in sort of the initial stages of this very exciting transaction. So for today, we're not really taking questions. That being said, everybody should understand there'll be Zoom calls coming up. There'll be marketing roadshows. Everyone will get a chance to address all of the questions they need because, quite frankly, this, in my opinion, is one of the most exciting transactions I've ever been a part of for a multitude of reasons. So I'm actually going to start with the presentation, and when I get to the Pacton side of things, I'll probably hand the torch to Dale and Carly. But for the time being, like most M&A transactions, there are several reasons and rationale for doing them. But in this particular situation, a lot of people, I suspect, haven't necessarily thought through the complexities, but also the benefits. And one of the biggest challenges that this industry, and in particular gold companies, have faced is a terrible gold market is, of course, one of them, but also understanding what it is that majors want. And Dale has had success in his career. I've had success with the sale of Pacton. And what people need to understand is majors and mid-tiers, they want scope and scale. And what this merger does is it brings a world-class exploration portfolio together, literally by far the most dominant landholders in the Red Lake jurisdiction. It brings into play synergies, and by synergies, obviously cost savings are a big part of that. Obviously an enhanced capital markets profile, and then it also brings together an incredible technical team, which Dale would be a part of, Carly would be a part of on our end, Sam is going to be a part of. But those four key aspects are things that I think as this gold tape improves, you're going to see majors become more and more and more intrigued and interested in a company like Trillium and Pacton combined. As you can see, and everyone knows, I mean, this was announced yesterday. It's a plan of arrangement. Pacton shareholders are going to absolutely have to vote in favor of this for it to go through. But after that, not a lot changes. We're going to improve our board. Dale and Nav are joining. And we're going to require, obviously, 66.6% of the shareholders who vote to vote in favor of it. But I think as people begin to understand and see what this combined entity is bringing to the market, they'll be voting in favor in droves. Because, as I said, you're looking at cost synergies, you're looking at land synergies. A lot of people don't understand. Lithium is a very hot commodity right now. The combined entity has tremendous exposure to some pretty intriguing lithium opportunities down to the south of our property packages. And then another thing people don't understand, while this is obviously a dominant play on a gold side of things, we have exposure to tremendous amounts of critical elements as well. So I don't really want to spend time focusing on lithium, but it is something that we are going to have, and it's going to be meaningful. This is a gold play predominantly, but there are very meaningful lithium and critical element opportunities along the Confederation Belt and to the south of our property package. Basic shares outstanding, what the company is going to look like. This is also very simple. It's outlined. It's outlined in the press release. And I see someone, just piping in there. It's not a terrible gold market. Gold's 1963. I just really want to reemphasize this. No one is investing in the juniors. Gold is at tremendous prices, but capital is flowing into the mid-tiers and the majors, and you're seeing an exit from the juniors because of liquidity issues. You've seen virtually no juniors benefit from this move in gold. And in my opinion, that's going to take probably $2,000 gold, which I believe we're heading to. And also another thing people should understand is, if you look back at every gold bull market, you see the majors run first, you see M&A, and then you see the juniors run the hardest. And that's why this is, in my opinion, so exciting. We're putting basically two very, very well-run, impressive companies who have seen very little love from the market together to create something that I think every major and mid-tier is going to want to have interest in. So I really don't need to spend too much time on the pro forma capital structure because it's obvious, it's evident, it's easily understood, and it's actually in the press release. Here's what's happening with the land position. And you can see that we're adding a tremendous amount of hectares to an already dominant land package. Again, though, when you go to, I'm just going to jump ahead from the board perspective. When you go to our land package, this is really the slide that tells it all. Newman Todd is an advanced exploration project. I'm actually blown away that we didn't see love on our last press release. I'm answering Jan. When you drill 100 meters from surface, followed by 40 meters of 4, followed by 20 meters of 9, in a gold-bearing asset that has 50 to 70,000 meters of recently 30,000 meters, 70,000 meters total drilling with world-class intercepts everywhere. And the stock doesn't do anything. That's why I say there's not really a gold market. But now you can look at this land package. You can look at who were around. You can see Knorland there. There was a JV with Barrick. Barrick was just kicked out of that. Barrick had JVs with Dixie and Red Lake Gold as well. And then, of course, you see Kinross and Evolution. But when you look at the rest of the properties and the rest of the jurisdiction, you're basically looking at the new combined co. It's incredible. I think you're going to see a tremendous flow of capital to this company. There are very few companies out there that are in our snack bracket at our combined market cap, which offers, in my opinion, tremendous upside to anyone who sees this, spends some time looking at it, looks at the JV, the Sedace JV up with Evolution, and then looks at Newman Todd, Willis, and then the Advanced property, which is in between Newman Todd, obviously owned by Evolution. And we now have a great way of approaching Evolution and walking through sort of the advantages of us doing something with that Advanced project to bring the Newman Todd complex from 8 kilometers of strike to close to 13, 15 kilometers of strike. Structurally, people need to understand the Dixie discovery really changed the way that Confed Belt was viewed. With a little bit of luck and a lot of effort, we managed to put our Confed Belt projects together. Obviously, bringing in Pacton, we're actually adding more control of that belt. But we literally have 100 kilometers of strike on the Dixie structure, the LP fault. We have 100 kilometers of strike on the Red Light structure. And there are 43-101s and intercepts and gold-bearing opportunities all over that Confed project. We made a discovery actually at Plymouth, and no one really took any notice of it. And so, when you're in a market that you're in, the way we have been, often creating these world-class exploration opportunities is the smartest way to go. And that's why the team at Pacton and the team at Trillium eventually came to what we believe is an extremely beneficial agreement for shareholders across both companies. I got an interesting question. I don't want to be answering questions, but this one actually comes from a friend, and it's are there examples of companies being sold that have great land packages but don't necessarily have big resources? I think to that person, I'll give you a call directly, but I'll I'll direct you to the Newman-Todd structure. We already have about 2.2 million of non-43-101 compliant resources at Newman-Todd, running at about 1.5 grams. And our recent drill hits, which were in the hanging wall outside of the Newman-Todd structure, actually fill in and will add to those ounces and also increase the grade. The challenge is how do you drill more when you don't have a market to really go out and raise capital. Bunch of other questions. I'm going to actually go to him and answer them. James, give me 10, just because I don't want to spend too much time answering questions directly. I just want to run through the sort of high level rationale behind this merger, and then also give the Pacton team a chance to talk. As you can see along the Confed belt, the core that we've been gathering, this is historically drilled core, looks phenomenal. It looks incredibly similar to the core at Dixie. The new team, obviously Dale and Carly, are going to have time to look at it. But we're in the midst of logging, assaying core that basically has been sitting idle on the Confed belt for decades. That ironically looks so similar in certain areas to the Red Lake mine, and incredibly similar to what Dixie's LP and Hinge Zone core looks like. This is Newman-Todd, which will help James, just to give you context. The historical drilling is most of the stuff in the background, but you can see our most recent holes. They're insanely good. 22-2-1-12, which is over to the right in the middle, was 100 meters basically at 1 gram from surface, basically a collar, and included another 9 meters at 20 grams per ton. And then 22-2-1-1 had 40 grams over 4 meters. Those are, in any normal market, world-class intercepts. And again, like I said, those are stepping outside of the Newman-Todd zone into the hanging wall. Great job by our geological team, and just was met by the market with nonchalance and no caring. And I have my own thesis on what's happening. Other people will have theirs, but effectively, because the junior market has struggled so much, all of the gold funds are basically taking liquidity opportunities to exit these smaller companies that don't have the liquidity that the mid-tiers and the majors have. Now, that's just my own personal opinion. More at Newman-Todd, as you can see, those intercepts were well outside of the Newman-Todd zone, which you can see here, and obviously what we're looking for with Pacton is to just enhance and increase those opportunities. So look, I've been talking too long. I want to hand it over to Carly and Dale. Guys, are you able to take control of the slides, or do you just want me to run them and you just speak to them as you chat?
I'm thinking that I haven't tried it from my end. Looks like I could do it.
Okay, if you can do it, if it's okay with you guys, I'll hand the torch and the baton to you to run through some of your projects.
Yeah, sure. I mean, we were in the Red Lake district very early. I have history there. I actually worked in the old gold core. It was called Dickinson at the time, and lived in Red Lake quite a long time ago. But the Balmer rocks were the only rocks that mattered at that time, and we were shocked when we picked up our Confederate assemblage, how little work had been done even since like the 1920s. So really, you're dealing with almost a virgin land package. And then, of course, Great Bear brought, all the attention to the Confederation rocks, and the market was disappointed on 4.5 million ounces which I know from experience that it's hard to build a 1 or 2 million ounce deposit into a resource. So for them to put, 4.5 million in a resource is actually pretty good. I think the expectations of 8 million or whatever were unrealistic. They'll get there, but it takes a lot more coverage to produce that kind of ounces. So basically, we basically took the structure, the faults, and structural controls as being more important than the actual rock type. And we've identified numerous trends, some that are actually along strike from Great Bear. We've got a number of near economic type numbers on these things, but not quite there yet. But we certainly have a lot of smoke, I guess you could say. We've identified 4 or 5 different priority areas so far on this main package. You could see the trends kind of extending in a kind of a northeasterly direction. Those are basically extensions of the LP fault or splays off the LP fault. And then there's actually one that's quite interesting that we haven't done a lot of work or had the chance to yet, and that's the Red Lake mine trend. So that's the northern package. It's directly east of the Red Lake mine. It's got some signatures, basically folded ultramafic rocks that could be trap rocks, which is the model of the Goldcore mine. So we have a number of interesting targets there. And Carly, maybe I'll let you just talk about the actual work in a general sense that we had done on the property.
Sure. Yeah, so we've been active on the project since 2018. We have a very good baseline, a foundation of that early exploration work, LIDAR surveys, MAG surveys, IP surveys. We've pretty much got soil coverage over all of the claim blocks that you can see here, with a number of anomalies that correlate to gold showings and anomalous gold values in the bedrock. There's a number of targets that remain to be drill tested and require follow-up work. Claremont, Boyden, Caracona, and Falkenham are all prospects that are drill ready, and numerous others that remain to be drill tested or require a little bit more exploration work before we can move that up to drill ready. Yeah, we've also done at Boyden and Claremont last field season, we did some outcrop stripping, expanded on some existing outcrop strippings, and did about 6,000 meters of drilling in 2022.
Also, just like everyone needs to understand, while all of these results are quite frankly fantastic, the reality is that having land like this close to arguably one of the most prolific, highest grade mines in the world is nothing short of amazing. And if you were looking at a world back in sort of 2004, 2005, when gold was all the rage, this company, these two separate companies would be trading at 10, 20 time multiples of where we're currently sitting at. And that's honestly the opportunity that I think we bring to everyone here with this new combined company. You get just this major combination of assets that are proximate to or sitting on or literally exposed to those faults that are carrying these world-class mines, with Dixie being the most recent example. And sorry to interrupt. It's just, I want everybody to understand how incredibly important controlling these structures are in Red Lake, because Dale and Carly would say this to you, as well as our entire geological team. Red Lake is one of the most structurally controlled jurisdictions in the world, which is why when you look at the amount of strike we now have on these structures, Mother Nature tends to repeat herself. it shouldn't be a shock to anyone that you have the Red Lake mine, you had Koshner, you had now you got Dixie, Madsen. Mother Nature repeats herself on structures in structurally controlled jurisdictions. So we believe that we will be bringing those opportunities to the market, not just one of them, not just two of them, but numerous. And then you layer on the lithium exposure, the critical element exposure. You get the makings of a very, very intriguing company for any major or mid-tier.
All right, so so that's our projects. We also have a pretty interesting piece of land in the Uchi subprovince to the northeast, and we haven't had a chance to do a lot of work there yet. But as you'll notice, it's been consolidated by First Mining. It looks like they're completely surrounded. So that's another.
And the irony is, we have some up there as well, guys. Like everybody on this call should be looking at these maps and going, "Wow!" Like these companies fit together really, really, really well.
All right.
Sorry, Dale.
I mean, this is more of a general statements about us. Having all of these things under control and making them better, basically, with this combination, I think. There's not too much more to say about these things being an early stage exploration company. Until we go harder on the actual deposit, I think, and try to get that into a resource. I think that might answer one of these questions on the board about the resource versus the large land package. I think in this company, we're going to end up with both, possibly a couple of resources.
Yeah, Dale, and to follow up on that and actually answer a few of the questions at the same time, Newman Todd gives the majors the excuse to pay up for the exploration property that we're putting together. SIDACE adds to that. So, we've now got advanced exploration properties, which, to answer someone's question, absolutely majors are interested in and have looked at. And we've got this world-class exploration portfolio, which in my opinion, and quite frankly, in the opinion of majors that I've talked to, provides exploration and discovery potential to fill those project cupboards that the majors need filling desperately over the next decades. Every single major is facing the exact same problem, and every single major is looking at this as one of the preeminent jurisdictions in the world. And people are asking, why hasn't the market gone crazy on this? Well, because this is the first day that we've actually talked about it. And again, just go look at every single junior gold company out there. I still think we're going to need $2,000 gold for these to really rip. And if people actually look back at the share price of Pacton and the share price of Trillium back in, I think it was 2001 when gold went to 2,050, both of our companies were trading at 10, 20 times of where we're trading at now. And, I can tell you that the Confederation company, which became Trillium, which only owned Newman Todd in 2013, had a $200 million market cap. So this is going to be about me and the team getting on the road and literally, speaking to everyone and anyone. I just got a question on Trillium's historical core assay results. They're in our deck. Just go to our website. There's intercepts greater than 100 grams per ton in Newman Todd. I'm going to say 60 of them. I can almost, I hate using the word guarantee when you're in an exploration company. I will be shocked if Newman Todd doesn't become a mine. We just need a market where we can raise capital efficiently and effectively, because, in a world where gold was bid and these companies had realistic fair value, which were not even, like, just to give people context, Trillium's trading at almost the value of its mine camp. Like, literally, you buy a share of Trillium right now, you're getting the Confederation Belts and Newman Todd for free, and you're paying for our mine camp. And Pacton is not all that dissimilar. So this is one of those opportunities where, if the market was efficient, no one would make money. The market is inefficient, and that's when opportunity presents itself. So yeah, if you want to go look at the historical core assay results, just go to the Trillium website, go to the Newman Todd slide, and there's hundreds of plus 100 gram per ton intercepts, and people have just ignored them. And so unless Pacton has any more comments, Dale or Carly, I do want to leave it very high level. But as I promised everyone, we will be coming back to answer questions and doing, Zoom calls, face to face. I'll be a road warrior. And
we're available.
We will be answering everyone. Yeah,
we're available.
Phone
as
calls,
well, Russ. Like,
yep.
We all have our numbers out there.
Yep.
I see one interesting question about pressure from shareholders. No, this was born from Russ and his team recognizing, and Pacton in the same way, recognizing that the combination is just an absolute dominant piece in like Red Lake Camp has come and gone in favor. I mean, it goes away for a while, but it always comes back. And you have to put these things together when markets are soft, because no one wants to see another small cap junior with a small piece of ground somewhere. So this is a way to get over that. Not from pressure of shareholders, but from a willingness of management to do it.
I use a funny way of explaining it, Dale. Yours was fantastic. I say it's like walking into a bar and seeing someone that looks exactly like you, walking up to them and realizing they're your half brother or sister you never knew you had.
Yeah, exactly. So yeah, if whatever you think, Russ, if you want to call it, I think
we're
good.
Yep. Unless there's anyone else or anything else we need to do on the Red Cloud side, I want to thank everyone who attended. I really appreciate everyone's time. There was a question on insider buying. I'm sure that when we're no longer restricted, you'll probably see more of it. But to be perfectly blunt on my end, I've mortgaged my entire life for this company, and when you hear that from a management team member, you can be assured that they're always going to do what's best for shareholders.
Well, on the Red Cloud side.
All right, thank you.
There we go. Thanks everyone for joining us today. For the audience, just a reminder, all replays will be available very shortly, so you can visit redcloudfs.com. It'll be on our YouTube page as well as all across social. Like the team had mentioned, they'll be available for calls and Q&As over the next several weeks. So just keep your ears perked up for all those details. And to everybody else on the line, if you're interested in more content, please go over to redcloudfs.com. You can view the full webinar schedule, more exclusive content, and interviews with our host, Mark Bunting, for RCTVs and all of our podcasts too. So that's it for today. Thank you all again for joining, and we'll see you again next time.
Thanks, everyone. Thanks, Dale. Thanks, Carly. Have a great day, everyone.
Thank you.